Hi everyone, Stuart here again. Hope you can hear me loud and clear. That audio suddenly sounds like it's not working. So I'm check me for a second. Oh, that looks okay. Hopefully you're okay on YouTube and X as well. It's the only two channels we're on at the moment. But more to come in the future. Don't worry about that. Hope you're all well. You've had a good Monday. It's the 14th of July, 2025. Markets are continually perplexed by what Mr. Trump has got to say, President Trump's got to say, particularly over the weekend about Chair Powell, and well, not necessarily directly from Trump, but certainly his coterie, shall we say, his rhetoric continues to put massive pressure on Chair Powell. But he's a tough cookie. Remember, Mr. Powell was put in place by Trump in his first administration, so he knows what he's about. He's a self-made man himself. So anyway, we'll see what happens. But lots of chatter and lots of criticism from the two Kevins, as they call it, Walsh and Besant. Besant's the current, not Besant. That's the Scott Besant's the trade secretary, and it's Kevin, not Miller. Kevin, he's the right wing immigration guru. Anyway, more on that later in the week, no doubt. But dollar under a little bit of pressure. Markets have been sort of moving a bit sideways today. We've had a big old rally in Bitcoin, and the FTSE 100 has hit a new all-time high over 9,000 in the last hour or so. So Bitcoin at $122,000 a coin earlier today, and say FTSE at 9,000. Two things that caught my eye earlier on today on a relatively quiet Monday. As far as the rest of the week's concerned, obviously, key thing is the inflation data out of the United States tomorrow. We got inflation. It's inflation week, basically. The UK announced theirs on Wednesday morning. Europe Thursday. Australians earlier in the week as well. So plenty to get your teeth into this second full trading or third full trading week of July. And the other big thing tomorrow, as well as the US CPI, is obviously the big central banks, not central banks, the big Wall Street banks, I should say, excuse me, kicking off earnings season. How will the stock markets respond to that? And has Q2 been as good as many are saying? And we're going to see this continued sort of move up in the markets. We've had a bit of a move down the end of last week. But anyway, well, today we're going to focus on scalping and scalping strategies. I'm going to do a quick review of the first few slides that we did last week and in May about what makes a good scalper, and then I'll concentrate more on the actual 2 or 3 strategies we're going to run through today. I'm going to introduce a new one, which isn't necessarily on these slides, but it's very straightforward. The VWAP, very, very popular, volume weighted price analysis. So it's based on the volumes of the asset that you're trading. How's it doing compared to its average price? And it's dynamically calculated. Many people are using it these days. Whether they're using an AI robot to help or not, it's a key pivot, key anchor for many. It's just another indicator, to be honest, with all due respect to it. You know, there's been thousands over the years, and it's just another indicator. But anyway, more on that later on. So scalping strategy. So as I said last time, anyway, that's me. Background in the City of London, in Cyprus for best part of 12 years, working for best part of 20 years, in fact, wasn't it? I was working for brokers for 12, 15 years. So we're going to look at, are you designed to be a scalper? What is scalping? We're going to run through these quickly because we've done these 2 or 3 times before. How to get going, some of my ideas, the pros and cons of scalping. I say I'll do these quite quickly, these first 5 bullet points. Attributes, personal, physical, psychological attributes that make a good scalper, that define it from a different type of trading. There isn't many, to be honest, as you might expect. There's some key things. The key one is this time issue and how we deal with it, both physically, psychologically, emotionally, mentally. All those key things are the things we're going to look at. So we're going to look at, we looked at Heiken Ashley and moving averages approach last week. Or last time, I should say. Now we're going to look at pivot points. We'll look at some a Bollinger Band stochastic setup, the triple exponential moving average, and the MMA, the adapted moving average, I should say, excuse me. And then I'll say it's not on here, but we'll have a look at VWAP as well, because I know a lot of you are using it, and it's there's two ways of approaching it, in my humble opinion, and these are just my thoughts on that, how to make money in the market, which is all about. So let's quickly run through these. Remember, with scalping, you can't get attached to either being a continually bullish or continually bearish. You've got to be able to flip between the two. So are you designed to be a scalper? What sort of trader are you? As Andrew Aziz, a very, very successful day trader over the last decade, a Bear Bulls Traders, if you want to find him on X, or X it is now, isn't it? And he runs a very good site. He's wrote a great book, Intraday Trading, or Day Trading for a Living, I think it's called. I think he's just about to update it, if I remember rightly. But really, really good guy as well. Success in day trading is all about finding the right balance between risk and reward. You could scribble out that word day trading, to be honest, that Andrew's written here, and it's the same in all types of trading, but particularly in day trading because of the time constraint. Okay, you've got to be able to switch from being a long distance swimmer to a slowly moving jellyfish with a sting in your tail, to the guy that is happy to jump into the market and take his trades and take his punishment come a winning dive or a losing dive. So you got to be able to be flexible. It's a short term, lots of trades in a short period of time, maximum of 5 minutes, I would say, as a scalper. But this key line at the bottom there, just because it's fast does not mean it's always profitable or easy. There's this strange perception in the market with many, I've spoken to thousands of traders over the years, probably tens of thousands of traders, to be honest, but they all have this idea that scalping is for them. It's quick. You can get in, you can make money very, very quickly. And again, it's their mindset. They're focusing on making money, not protecting what they have and not learning what they're doing, not putting some effort in. They want a quick return. Scalping fits into that quick return. You don't have to wait for any length of time, but as quickly as you can make profit, the market will take it off you even more quickly. So be prepared, my friends, and is it for you? That's all I'm asking. And again, with the eruption of the prop trading business, not necessarily ourselves, the proptrade.com, but you see a lot of short-term traders, people focusing on trying to get through their challenges within a day or 2 days or 3 days. That's nothing in the lifetime of a trader. So there's no rush in this business, although inherently you'll see people wanting to make money very, very quickly, and you see it on all the bulletin boards, on all the support desks, people trying to make things quickly, and that feeds into this mindset of the scalper. But if you're not fit for scalping, you're psychologically not fit for it, you're going to be fighting yourself all the time. So you've got to find, you've got to have good concentration. You've got to look for attention to detail. If you're going to trade, certainly the Forex markets, you want to be looking if you're available during the deepest liquidity, the tightest spreads of the day, because people are always moaning about the spread's too wide or the slippage was too much. Yes, slippage does happen, and yes, we're all human. We all make mistakes, and mistakes are made by everyone from us upwards, to the big banks, the big trading houses. Everyone makes a mistake. But if you want to minimize that spread, you minimize the chances of being sort of cornered by a particular market maker or a particular, bank, trade when the deepest liquidity and the tightest spreads around. That is the London session. When I say London, I mean sort of 8 o'clock GMT through to about, let's keep it simple, 1800 hours GMT. That's the deepest liquidity, and the best part of that whole 8 to 18 GMT is the second half of the day when New York is open as well. So when New York is open, London's open, that's the best time to be trading if you're trading on a short-term basis. It's stressful, you need discipline, you need patience, and you need a key personality. You also need, as that final bullet point says at the bottom of there, you need a good connection. So whether you're using your phone, whether you're using your laptop, whether you're using your whatever it is you're using to connect, make sure you've got a really good connection to your broker, your service, where your trading platform is, where you're trying to execute your trades. That's sometimes different. So make sure you've got a good connection. Whatever you're trading, guys, remember that Again, this is just my idea. Don't try and trade everything if you're trying to do it on a short-term basis. Focus on the majors if you're going to stick to the forex market. If you're going to stick to like crypto, I'd suggest you stick to like Bitcoin and Ethereum, maybe a couple of others, but maximum 2 or 3. If you're going to trade the oil market, US oil is probably, I don't know, it's 6 and 2 3s. There's pros and cons for both of them, but I'll trade both of them, UK oil and US oil. Metals market, probably gold, maybe silver, copper can be a bit crazy, but find what works for you. I know lots of guys that worked in mines in South Africa. They have a real sort of intrinsic feel for the gold market and what's going on in the gold market. People that work physically in the mines or worked physically in the mines. So, find what works for you. So stick to 1 or 2 pairs, maximum 3. If you're going to trade forex, stick to the majors. And as I've noted here, even the pound yen, which is lots of people like trading it because the amount of pips that are on offer. But because it travels a long way, like the pound against the Aussie or the pound against the Kiwi as well, the spread can be bigger. So even here on the majors, the pound yen, you see it's 0.6 here. This is just a screenshot of an example of a broker from a few years ago. But these highly liquid pairs tend to follow the laws of trading, the laws of ranging and trending better as a technical analyst. That's what I found in my experience. So if that's how you want to trade, stick to the majors. Be careful trading something that's illiquid and it's not very popular, or there's not many people involved in it, especially if you're trying to scalp and just take a few pips out of it. And be careful of too many correlated positions. I'm more than guilty of that. When I'm, I've been very, very short the dollar and I've gone big. So obviously, if those trades fail, all of them fail. So just be very, very careful. When we say correlated, we mean like a trade here. So if you are long the euro dollar and short the dollar yen, you're banking up a negative view of the dollar, because you're wanting the euro dollar to go up and the dollar yen to go down. So they're correlated trades. Okay, so just be careful of that. Too much. Okay, I've got a very interesting note from my boss. That's very good news, Katerina. Thank you for that. I'll speak to you later, if that's okay. I don't know if you're watching or listening. Yeah, so what's going on when you join the market? So although we're going to join as a trader, as in the deep liquidity of the day, but what's going on? Is the market going sideways? Is the market in a strong trend? So here you can see we're going up, here we see we're going down. So we've got 2 trends here on an intraday basis, and then we've got two sort of consolidation zones through here and through here, but here, and here, and we got 3 trends, 2 up and 2 down. So make of that what you will, and then use indicators or a strategy that more fits the movement of what's going on in the market. So for me, 5 key points: focus on 1 or 2 markets, trade in the direction of the trend. Again, this is just an idea. It's not an exact rule that I follow, particularly myself either. But if the 1-hour chart trend market is going up, and the 30-minute chart is going up, and the 15-minute chart is going up, if you're trading the 5-minute time frame or even the 1-minute time frame, just be careful of trying to take too many big short positions when the higher time frame is going up. You might be getting shaken out, and you probably are getting shaken out by the market makers want to test your strength of holding it. So if the trend, say on the 15-minute, if you're going to trade the 1-minute or the 1-hour time frame, if you're trading the 15-minute or 5-minute, at the 30-minute, if you're trading the 5-minute, if the trend is clearly in one direction, quite often isn't, but if it is, go with the trend. Don't be in front of the screen too long, because the concentration levels can be quite high. So understand yourself. Most important thing is those last 2 points, 4 and 5. You've got to be able to control your emotions, whatever type of trader you are, whatever type of time frame you're trading. But when you're trading as a scalper, let me slow down and say this slowly, you've got to really focus on it, simply because everything is concentrated and everything is exaggerated when you're scalping. So your fear and your greed are exaggerated because you're dealing in microseconds sometimes, and so it just can throw you all over the place. So as human beings, we have these normal natural emotions: fear, hope, regret, all that sort of stuff that makes us human beings, and we can't get rid of it. But as a trader, when we bring it to our trading room or our trading position, we've got to manage it. We've got to understand it's there and deal with it. How do you deal with the beating heart, the sweaty palms? You've got to find a way to do that, whether it's deep breathing, whether it's only trading for 20 minutes at a time. Find something that works for you. I've got all sorts of stories I can tell you another day about how I dealt with all those sort of emotions. But principal one though is always manage your risk. So when you're losing, when it's hit your stop loss, get out. Have a stop loss. It's very difficult sometimes when you're trading manually as a scalper to put the stop loss on, and you've got to be quite even more rigorous if you haven't physically put a stop loss on, to manually accept that it's hit it, it's gone to it. I mentioned at the beginning about the FTSE 100 getting to 9,000. This is a different example. It's not scalping, but it's exactly the same. If I can just show you the chart, we were long this. If you've been following me at all in any of the trades we've been doing, we were long this position, and it was going really well. We'd got in here. Our first target had been hit here, so it's an end of day trade. So it's a little bit different, but the psychology is exactly the same. And you can see what's happened here. I was pulling the stop loss, so we pulled the stop loss up here on I think it's Thursday or Friday or whenever it was. This is the 4-hour chart. If we go back to the 1-hour chart, you can see it's even more of a bugger. So we pulled our stop loss up here, or I'd pulled the stop loss up here manually, and as you can see, we just got took out. If that was just literally, a few points lower, we would have been still running that for another 85 points to 9,000 from 9,815. As it was, our stop loss was at 8,919. I remember putting on like the sound of the number, but it took us out. And today we've had a rip roaring move for the FTSE, and we're through 9,000. It's a new all-time high, and trend is still going. Sort of pulled it up, but that's what trading's like. You've got to accept that was a hard stop loss, so it took it out. It got hit to it. But if you just had that as a manual sort of a mindset stop loss, perhaps you wouldn't have accepted it, and it could have not bounced off here when it got here. These two big candles could have continued down. We could have been all the way back down here to our target, and in fact we could have all been all the way back down here to our entry, because nobody really knows what's going to go on in this most important part of the chart, which is this one here, isn't it? Okay, we don't know where this is going to go now from 9,000. It could go back down to here again. It could break 9,000 quite easily and keep going. We'll have a look at some technically what we think it may do. It's obviously bid to the upside, a bit like the Bitcoin chart, but you get my point, hopefully. That you've got to be able to manage your risk. So keep your risk small. When you lose, you only lose 1 or 2% of your the dream team. Very good. Very good. Boss is on fire this afternoon. Okay, so benefits and drawbacks of scalping. One, you get a very high hit rate. So if you like to have big win rates, scalping may be for you, because all you're doing, you're predicting 4 or 5 pips, 10 pips maximum move, aren't you? Or 50 pips maximum, say. So it's easy to predict short-term moves. So you get a high hit rate. That's a tick psychologically for some people. Sort of gets me. I'd quite like that sort of approach. Big benefit is there's no overnight risk. So like a shop, you close the doors, the business is closed at the end of the day, and you think it doesn't matter what happens overnight because you've got no skin in the game. You've got no risk on the table. You close the day flat. And again, very strict scalpers, very strict traders will, they will physically, I've seen them do it all the time. I'm stopping trading at 6 o'clock, whether I've got trades open or not open. All those trades get closed, whether they're in profit or not in profit. Seems crazy to me, but it works for them. Works for them. So they do their books, if you like, end of every day or the end of every session. I'm going to trade for 1 hour. That's how strict I am. That's how disciplined I am. If I've got open positions, whether they're winning or losing, they get closed after the 60 minutes. Seems a bit mad to me personally, but that's how people work. Takes away that risk. They can close it, close the laptop, switch the phone off, go and walk the dog, go for a swim, whatever they want to do. Okay. Other big benefit, you're using a lot margin. So your targets and your stops are much, much closer than if you were trading on an end of day basis, for instance. If you're only trying to make 10 pips or 5 pips, your targets are obviously very, very close. If you're trying to make 200 pips, because you're a big swing trader, that's gobbling up a lot of margin on that one individual trade. So margin is used up much less as a scalper. You get a lot of experience with real trades very, very quickly because you're doing real trades on real markets and real time, not in weeks or months like you might do with an end of day trader. You're easy to adapt. You don't get stuck in a position, or you shouldn't get stuck with a position. Too many traders I see all the time. I've had I started as a scalper on 5 minutes, Stuart, and this trade here that's 3 months old, that's still open because it's out of the money, was a scalp originally, but now it's a swing trade based on the weekly time frame. That is nonsense. That just never works, ever works. But you'll be amazed the amount of people that do that. And again, it's human nature. We all do it. I've seen it in all different parts of the world, all different types of people. Some very, very intelligent, well balanced, I say highly intelligent, very, very well capitalized people do that sort of thing, principally because they can't accept being wrong, wherever you are, and that affects you, whoever you are. So you've got to be able to adapt. And the other big thing, the great thing I love about scalping, trend following trader traditionally, no, that's where I've made all my money, is long trends. Okay, so long streaks are possible, even on a daily basis. But if you're only trading a minute time frame, let me just give you an example. See if I can find one from today. Presumably we will with FTSE because it's trended so positively today. If we look at the FTSE here, you can see it's had a strong, this is the hourly candle, so it's had a strong diff. So if we go all the way down to the 1 minute time frame, and I just reinsert that. So there we go. There's a 1 minute time frame for the FTSE from this afternoon. So you can see here, using this strategy, which we talked about last time, we'd have been short here, we'd have gone long here, long, and got out there. So we'd have made that. We'd have then not gone long again till there, but we'd have closed that out. That would have been one trade. Then we'd have gone long here, and got out here. This is because it's a strong trending day, and got out there. So it's a long trend here. A guy that was trading this, that's some choosing, let's just use that, and then that would have gone short, and it would have been stopped out flat. Then we'd have gone long. That would have done stopped out flat. Then we'd have gone long there, and that would have been a winner. So if we go up to so you get my point on the minute time frame. So we're having multiple trades taking pips and points out of this as the trend's going up. The flip side of that would be, I don't know, let's say the hourly trader, where it went, he waited right till 9 o'clock this morning. He's gone long there. His stop loss is down here somewhere because it's a huge candle, and he stayed and so it's done nothing all day. And it's gone up, benefited from just hanging on but not doing anything, whereas the scalper has been in and out collecting points, and that's comfort. That profit is banked. The guy that's got in here on this hourly time frame doesn't know that his profit's banked, and it's gone nothing. It's gone nowhere, has it? 9, 10, 11, 12, nothing. It went down a bit. If he'd had his stop loss, he pulled his stop loss up too quickly, he might have been stopped out. But and whether he'd brave enough to get in there at 4 o'clock after the 3 o'clock candle's complete is questionable. But anyway, you get the point of these long streaks are possible. Sorry, I've talked too much again about this, the pros and cons. So I will get to the indicators. I'll try and make sure I'll do that before the half hour's up. So long streaks possible. The flip side of scalping is if you've got a high hit rate, you need high accuracy. You're only dealing with a few pips, so you can't. You might actually, although you get the paradox of getting potentially getting a high hit rate is if your accuracy isn't good, you don't get the high hit rate, so you end up blowing it all. It can be very, very tiring because of these concentration levels, and it's not necessarily for everyone. One of the biggest drawbacks is 3 and 4 here, 3, 4, and 5 here. The costs per trade are very high as the targets are very, very close. So remember, the costs of business as a trader are your trading costs. And what your trading costs? Well, it's the spread. If you're using a broker or a prop trade, where you don't get charged commission for taking the trade, that they make their money from the spread of the market. So the spread at 0.5 of 1 pip is the same as if you're looking to get 5 pips to the upside, as if you're trying to get 50 pips or 500 pips to the upside. So the cost per trade is much higher for scalpers than it is for swing traders or position traders or anything like that. The other key thing that always amazes me is people that say they're scalpers have no idea about the news. So they're scalping, they're trying to trade on 1 minute time frames, but they don't know there's a massive news announcement coming out in 30 minutes or in 40 minutes. In a week it's coming out. Get yourself an economic calendar. Make sure you understand the high impact news events that are going to move the market, regardless of what the news is. Okay, this is the point, because a lot of players in the market, a lot of the big players have orders to get filled, either sell positions or buy positions, and a lot of them will drip orders into the market during the normal business day, but then hide a lot of their positioning on what they're doing in the noise of a news item. So whether the news is like in line with the expectations and the market goes in the opposite direction, that could be an example of a big player riding the noise. But you be careful. You as a retail trader, you have your responsibility to know what's going on. So get yourself a good calendar, understand the impact of the news that's coming out, understand what it's got to impact. Again, which is why we don't give news trading as a default setup on our platform. We say if you want to trade news, you either buy a more expensive account, or you add a add-on to your basic account. You save around the 4 minutes, the 2 minutes before and the 2 minutes after the the announcement. So that's the key reason about the news. You've got to understand that. Your exchange, your time for money exchange can be a lot as well. So you can be doing all this effort, doing all these trades, and just making a few pips or no pips at all. Last week for me was a great example of that. Even though these are end of day positions, I lost 16 points last week, but we completed 1, 2, 3. Should have this down? I've just written it down here. 1, 2, 3, 4, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26 trades last week, and we lost 16 points. I mean, what's the point, some would say? Well, that's what happens sometimes. We were up 50 points on Monday, and we closed the week down 16 points. We were down 86 points just on Thursday, but we'd made more money on Tuesday and Wednesday. So that's how it goes, So there can be a lot of exchange time for money exchange when you're just concentrating on these small time frames. And then finally, as I've said a few times, I'm going to say again constantly throughout the rest of this hour, your emotions as a human being are completely exaggerated because of the compression of the time, and as a scalper, it does exaggerate your fear, your greed, your hope, regret, all those things that make us human beings. But fear and greed are the two key psychological components that drive us as traders. We get scared and can't place the trade. We get far too cocky and greedy where we've had a few winning trades and think this is really, really easy and I don't need to follow my rules anymore. It's all about patience, discipline, control, and understanding yourself and controlling your emotions. So as I say, excuse me, get a good calendar, understand the liquidity of the day. This is a great screenshot I took many years ago from Bloomberg, how things, get how the market goes, how the players really join the party during the London and New York session. Exaggerate these days than it was, but still, we shall see. So there we go. Scalping strategies, and understand the new sessions, the turnout, as I said, I've written here, the changeover times between London and Asia and New York later on in the day, New York and London. All those times are key. So what physically makes a good scalper? Again, I've got 6 points here. You understand yourself. You deal with pressure continually. You understand when you are wrong. and accept when you are wrong. You can cut losses quickly. Lots of people can't do that. Those examples I taught before, it was a scalping trade, but now it's a 15-minute trade, and now it's a end of day trade. It's still in the loss. I'll look at it on a weekly chart. It doesn't look too bad. Come on, guys. Accept you're wrong. Move on. Cut it. You deal with pressure well and continue, that I've written here, but you can still make quick decisions or decisions on a regular basis. I call this like a cognitive load, how the brain deals with these things. So how do you cope with losing lots of trades in a row, thinking you can't do something wrong? Do you focus down on that particular asset or that particular day or that particular session? Because sometimes, when you start doing all your analysis, you think, well, look at that. I'm absolutely rubbish on a Tuesday afternoon. If that is the case, if that data is telling you, don't trade on a Tuesday afternoon. But we have this sort of whatever it is, internal clock or internal voice in our heads saying, well, no, I am gonna trade on a Tuesday afternoon. Be able to deal with all that sort of stuff. Avoid Monday mornings if it's quiet. Avoid Friday afternoons if it's really, really quiet. If it's too volatile for you. Avoid the end of the month, end of the week. Avoid trading around earnings announcements, which we've got coming up this week. Or understand all those things: the Monday morning, the Friday close, the earnings announcements, and try and make the most of them. What makes you tick, whether you're a scalper, whether you're a long-term trader? You've got to be able to do all these things. But as I say, as a scalper, all of these are very, very much in focus because of the time scales we sit under. Okay, so in summary, don't try and trade everything. Stick to one or two markets when you start going. And I haven't written this down here, but again, it might be a bit of an unnecessary pressure on yourself, but try and see if you can, when you get started, try and either when you're using a demo account or paper trading, try and quit once you've you're ahead in that session. So if you're going to say, right, I'm going to try scalping out, and make one or two trades. I've made a profit. I walk away. Leave it. Just leave it. See if you can do that. Trade until you're making a profit and then walk away. See how that gets on. See how you deal with that. I'll be interested to see if I get any feedback on that. I'd be interested to see how you get on. Okay, because it's a bit of a tip that's worked for a number of people I know. Okay, trade with the trend in one direction. It's not a rule, but it seems to make sense to me. Whether it makes sense to you, that's your call. Don't be there for too long. Keep your emotions in control, fear and greed, and always manage your losses. Make sure they're not going to be more than 2 or 3% of your entire account on one particular trade. Otherwise, you'll very, very soon run out of money. And again, that's why here at the proptrade.com, we don't want you to be risking more than 3% of your account on any one particular trade. People again get a bit shirty about that, get a bit upset about, well, why not? And go gung-ho. Well, it's sort of protecting us to an extent as well, a little bit. But more importantly, it's protecting you, because very, very quickly you'll run out of funds risking more than 5% per trade. It only needs 4 or 5 trades to go wrong, and you're very, very much equity down, and then the psychology of that, getting back up from that, becomes even more difficult. It might not sound a lot, but once you're down, 20%, it's very difficult to get back up to zero. Once you're down 30, 40%, 50%, it's virtually impossible, in my experience, to get back up even to zero. So keep it simple, keep your risk small, don't lose too much, but give it a go, because it's there and anybody can do it. Okay, so now I haven't actually got a drink with me here, so excuse me. And I haven't even got anywhere I can go and get one, but no, never mind. I'll battle on. Right, so today we looked at taking action in the EMA crossing strategy last time. This time we're going to look at pivot points, 2 approaches: the bounce and the break. We're going to use another moving average, this time with stochastic. So we're going to use the stochastic for the sort of floppiness, the flippiness, and then the EMA to see what side we are. It's not That's one approach. Then we're going to use the MMA and the TEMA, and now we're also, as I said, going to have a quick look at the VWAP. VWAP, very simple, very straightforward. That's why I should have probably added a little line on it. But right, so the pivot points. Let me just go into pivot points here. Sorry, I thought I had two slide presentations there, so I apologize. It's not. It's all just one now. And we need to go back to our pivot point strategy. Okay, so pivot points, bounce and break. So there's two approaches here. We bounce off the pivot point, coming up to it and bounce back down, or come down to it and bounce off it, or we hit it and then break through it. So we break it or we bounce from it. Okay, let's have a quick look at what the chart would look like. And if I just bring up a different platform, where's it gone? Here we are. So if we look at the sorry, looking for pivot points on my load layout, and I have a pivot. There we are. So let's just let's get rid of that. We're going to trade that. Okay, so this is the happens to be the FTSE again with a pivot point chart. It's actually got the VWAP on here. We'll come back to you. We'll use the same one for the VWAP. But pivot points, what are they? Well, hopefully a lot of you understand what they are. So basically, each day you get a range in the market, and pivot points can be set up. The way I've got the pivot point set up are on this particular chart here, guys. We show the settings here. This is, and again, with the trade locker using TradingView, you've got all sorts of ways of showing pivot points. There's multiple types of pivot points. These are, well, I've got the floor ones on here. I think TradingView defaults to traditional or daily or something, but I've got the floor ones on here. You use Woody, Fibonacci, DeMarca, Caramilla, all different types. They're all sort of nuances of the same thing. Like Woody and DeMarc, two separate guys came along and sort of tried tweak the maths that's involved in creating the pivot point. So what pivot points are doing are using previous days data to see where the support and resistance levels were during that session. So the most important ones are the R1, the first resistance of the day, and the S1, the first support area of the day. Most price action takes place within that range, a bit like a Bollinger Band, a bit like other envelopes you can use. And the key level is the pivot point itself. So when we're using pivot points to trade, I've only ever used these 7 lines. I think it's more than enough, because if we get to R3 or S3 in any one particular day, there's a massive trend going on usually. Markets don't tend to move up to R3 or down to S2 and then S3 and then bounce off. They tend to keep going. So there can be some significant moves, but most days, or not most days, about half the days, about 40% of the days, we will get to either R1 or S1 during the particular trading session. Like we see yesterday, yesterday's R1, we didn't get anywhere near it, did we? We were just sort of hanging around, came down at the pivot point and just bounced off it. This morning here, we were just below the pivot point here. We just moved over the pivot point, but we've had a good day. We've moved up, trending day, and we got to R1. New all-time. It just happens to be a new all-time high. But you know, the pivot points and the resistance areas and support areas don't, you know, I've no idea. It's just maths. Okay, but as you can see here, if we just zoom this in here, you can see you know, I've only got this back 5 days. Again, you can have this back as long as you want on the how you set it up, and it's really up to you. I've only got it counting back 5 days, and I'm using the daily time frame. You can obviously use different time frames, but I'm using the floor pivots and the daily time frame. Again, you can see, you know, auto, I think, is the default for the trading view. Okay, so that's the daily time frame. What we're interested in, obviously, is the not the 1 hour time frame, but let's say the 1 minute time frame. So if we rearrange this, this is a bad example because we've only had one hit today, but you'll see what, and we've gone straight through it. Yeah, that's a bad example today. Actually, no, this is before the market opened this morning. So this was we were down here round about. This is R1. Remember, big thick blue line is the pivot line. It's the 1 minute time frame. Let's put it up to the 2 minute. I might be able to get more on rather than just the. There we are. It's a bit better, isn't it? We've got all the day on there. Okay, so before the UK Open, we were below. We didn't get to S1 and didn't get to the pivot area. But on the Open here at 8 o'clock, we just went straight through it, didn't we? We didn't touch it or decline for it. We hit it and then went finished higher through it, and then we went long. Sorry, it then went on again. So that was a touch and that was a break. Let me show you what the rules are as far as the strategy is concerned. Okay, so pivot, point, bounce, and break. Obviously, we're using on the 1 minute, 2 minute time frames and using our pivot points, our support and resistance areas to create either a bounce or a break. Okay, so we got support, resistance using standard candles. So we have 6 levels plus the pivot point. So we've got 7 lines to potentially play with. I like it on this, this 1 to 10 minute time frame. We're looking at 2 minute time frame now on the FTSE 100, and the actual rules. There's the setup, floor and daily on our pivot point chart. The rules, okay, so bounce trade. So we will enter your trade when the high or low of the first price bar that fails to make a new low or high is broken. The following list shows the steps required for both long and short entries. So to go long on a bounce trade, this is the price bar touches the pivot support resistance area. The following bar fails to make a new low. So we've gone down into the pivot support resistance area, whichever it is. We touched it, whether it's on a wick or the body of the candle, it doesn't matter. So we've touched it. The following bar doesn't make a new low, so we don't go any lower. Okay. The subsequent bar breaks the high of the previous price bar. So we go down, we bounce, but we've got to make a new high for us to then enter a long. Okay, let me show you that on the chart. Where's my chart gone? I've lost my chart. This happened last time, didn't it? Where's my chart? There it is. This isn't an example of what's happened today. We've gone through it. So here, can I zoom this up? I can't really. Let me try a different asset. Let's try a different asset. Let's try the euro across. Let's try the euro. It's any better. Let's make this short. No, it hasn't bounced. That's gone straight through. See, that one touched it and then it went through it. So that's a break there. And this is only for either the pivot point or the stop and resistance area. Let's go up to 5 minutes. Make it a bit easier to see. There we are. So there we are. That was one there. So our first touch of the pivot point this morning there at 10:30. In fact, it's happened now, but that's broken through. Here, it's been going long for 20 minutes. We touch the pivot point. It makes a new. It then touches the pivot point again, and the subsequent candle makes a new high. So we enter on the following candle here, and it doesn't actually work out, does it, for 3 or 4 minutes? So we made a new high on this candle. We entered on the subsequent candle with our stop loss probably down here where the candle changed from red to green, and then it rallied, pulled our stop loss up, and probably stopped us out as we came back to the pivot point. So there's a minor move there at 10 o'clock. So it hasn't, I mean, not a lot's been going on today. It's Monday. It's one of those sort of things, because sometimes you can run from one side, from one pivot area, from one resistance or pivot area to the next level, but you can see that's petered out. It's come back down. It's gone the other way this time, and that's a break this time. So that one's touched it. It's then made a new low, and then we've entered here on the break of the pivot point there. So that's a break. It's not a bounce. It's not bounced from the pivot. It's broken through it, but it took a while for it to go. Our target would have been down here, but didn't get to the next pivot area at all. It's got to a VWAP. We'll come on to that in a minute. And then it's returned to the pivot. So that's, whether you've got out as it's failed to move lower, or as it's turned back, you've either, flat trade as it's gone up. This one, again, so this one has hit it, made a new high, and you've gone long there. It's gone up, and nothing's happened. It's gone against you again. So it's been a bit of a miserable failure today, this pivot point strategy. That one, it's broken it again. Oh, sorry, touched it here. Made a new high here, so we've gone long this time, not short. We've broken through. We went up a bit for another 5 minutes, but then it turned around and stopped us out again, and that's been a losing one as well. However, that one reversed, has gone up. It's touched and gone straight through. It's broken through the pivot point. So we'd have entered on this one here. Bit cautiously, I would argue. It's 16:15 in the day. It's very, very late in the day, but it's the biggest 5-minute candles you can see. So that's emphasis of perhaps weakness to come. So that's the biggest activity we've had today. So that'd be comfortable. So all those 3 or 4 losing trades here we've had has resulted in a big winning trade, because we've got in here and it's moved all the way down there to that pivot point. I would have got out there, I would have banked the profits. I'd probably ended up about flat for the day using that 5-minute pivot point strategy on the euro there. Okay, so that's the 2 rules with pivot points. We again, if the price isn't anywhere near any of the lines, you're not going to get much action. So if you came in to trade sort of from 12.50 to even 3:30, a few out, there's nothing happening. So you've got to choose the strategy that works for you, okay, and the time frame that works for you. So that's the pivot point strategy. Let me put that down there. I'm going to put that in here with all these others. Hopefully I can get that back later. Yep. So that's the bounce and the break for the pivot point. So whether we're going long or short, we just turn the rules around. Okay. So we're using the lines of the pivot and the support and resistance levels as our target. There we go. You can see here. So it broke a high. We didn't make a new high. It's rejected this. There you go. It hasn't made a new high, and it's gone. In this example, it's run down from this pivot area down to the next level quite nicely. So a low high after touch and a new low was created as well. So we got it hitting here on this black bar. So we go break the low of this move up, or last move up, trail our stop loss down and into the next level. Here it's much cleaner. We've broken the pivot here. We don't make a new low though, but we wait for that to happen, and then we break through very, very aggressively here. So the break down didn't make a new low, so we waited, and then we entered here, and it's run off down there. So it's the breakdown as opposed to the break. Oh, I've got some examples here. I didn't realize I had. So that's a clean break here. We've been running up, didn't touch higher, entry, and off we go, trailing our stop loss up, and got stopped out on that one, on that example there. It's better actually check the chat slides before I moved on. Okay, so next one is using the Bollinger Bands and stochastics. So I'm going to use standard settings for the Bollinger Bands and stochastics, also pretty standard settings. Standard settings on the Bollinger Bands, but I'm going to tweak the stochastic settings. So you might not have seen these before. So my fast or slow, my slow stochastic is going to be, the K is going to be 10, smooth is 6, and my D is 3. So 10, 6, 3 for my stochastic settings. And again, let's find that. I've lost it now. There it is. Where's it gone? Here we are. Let's just bring that back up. So stochastics settings. So Bollinger Bands and stocks is this setting here. So let's get rid of those. Let's get rid of that for now. What's this? This is something to the euro again. So you can see here the stochastic is 14 sorry, 10, 6, and 3. It's got the happens to have the RSA on here. So again, overbought is 80, undersold, oversold is 20. Bollinger Band's default setting 20, and I've tweaked it here to 2.5. Let's just go back to the normal ones. I was playing with this simply because we're getting more better signals as we moved out the top and below of the Bollinger Band. So what we're looking for is a touch of the outer Bollinger Band, and then for a cross of the stochastic. So here we've had a touch here. Actually, it's a daily time. Let's go back to the 5-minute time frame. It's more going on. So where are we? So here. What happened this morning? So we had a first touch there, and we're looking for a cross up now, stochastic. So the Bollinger Band has been the first to trigger here. So it's touched the outside of the Bollinger Band, and it's continuing to touch, but we haven't crossed up yet on the stochastic. The stochastic is still going down. So you could have either been with this as it stuck to the outside of the Bollinger Band, but that isn't what this strategy is suggesting. This strategy is suggesting a long position there, quite a tentative one there at this point here at 605, because we've come in from the Bollinger Band, and the K and the D line on our stochastic have crossed here, but we are still in the overbought area because we're here under 20, very, very low. So we've crossed here. So that would have been our first entry, but it's failed, hasn't it? Simply because the trend has been somewhat too powerful. What's the horizon there? So that would have been a first entry, having waited for this to set up. So we've gone up, but then it's stopped us out because our stop loss is probably down here somewhere. It stops out within 2 or 3 candles. So we're waiting for another signal. So we move down, we get another one here. Okay, so we've had another touch waiting for the cross of the blue and the orange line again. So this one works out this time. So we get a long position finally here, there on that cross there at 7:30, and that rallies quite nicely to target 1. And what we normally do is take about 80% or 75% of the trade off on the getting to the midline of the Bollinger Band, and then the second half once we get to the outer Bollinger Band. But because this is, let me change this back to the proper settings. So we probably there we are. It's obviously touched early, and the crosses of you can see the crosses here on the stochastics haven't changed, but the Bollinger Bands touched the outside earlier, so we got a first trigger there, but we didn't cross up until that point there. So nothing's changed there, even though I've pulled the Bollinger Bands in a wee bit. What all that's done is just shown that we've got an entry here. That was a failed trade. This is a very successful one. We got to target 1 here, and then target 2 immediately here on the outline. But remember what we're looking for. We're on the outside of the Bollinger Band here, so we're looking for a cross. So we'd have gone short there this morning, or whenever this was, 14th. Yeah, this morning that would have gone short there at 9:05 to the downside here. So that's a short there. It's crossed, and then again it's moved down, but it's taken till then before it's got to the Bollinger Band, and it didn't quite get to the at the other side of the Bollinger Band. But as you can see here, the stochastics has helped you out because we've moved down, and we're in the oversold area. So we're looking to get out, and now we've crossed back up there without touching. So I'd have closed my short and perhaps gone long there at that point there. It's not completely, fault proof, foolproof, but that's good enough for me. You can see what's happened. We're oversold. We've crossed down here, and we've gone target 1 and then target 2 quite quickly again. And then we're looking to go short here because we've touched the outside of the Bollinger Band. So we've gone short again there. Hopefully you can see what I'm doing here. You can see the cross of the Bollinger Bands. The cross of the Kane. Actually, it wouldn't have happened till that candle there, to be honest. There's target 1 at the mid of the Bollinger Band. And interestingly, this one, you see the stochastic keeps going down, but it was been a big spike in the price against us. So that would have been stopped out there. I would have been short here, looking quite nice. And then all of a sudden, bang, I've got stopped out. But we haven't touched the outside of the Bollinger Band, although we have had a cross there in intra Bollinger Band. The next Bollinger Band touches here. So I'm looking to go long at this point when the orange and the green and the orange and the blue line cross. Here the cross is there, that one's failed. There's another cross there, that one moved up a wee bit, failed. The next big cross up is this one, not until this one here, there at 14.30. So that's the next significant trade on this strategy there. Those other two would have been losers. That's got to target quite quickly, and then it's got to T2 as well, target 2 up here as well. Now we're looking to go short. We'd have gone short on this candle there. You can see the cross of the Bollinger Band. You get what I'm doing here, hopefully. There we are. So I won't keep going, but that's what we do. We're using the stochastic set at 10, 6, and 3. The Bollinger Band set at default, and we're using the Bollinger Band first, a touch of the outside band, whether it's the upper band or the lower band. Obviously, the lower band we're looking to go long, the upper band we're looking to go short, and then we wait for a cross of the K and the D line on our stochastic setup. Obviously, crosses in the overbought and oversold areas are more significant or potentially better, not always the case, but if you want to filter them out and only take the ones that are in the overbought or oversold zone, that's one way of reducing false signals and false trades. And then, as you saw with the Bollinger Bands, perhaps if you extend the standard deviation to 2 and a bit or 2.5, you might get more. But I'm happy with the standard settings for the Bollinger Band. So that's the stochastics and the Bollinger Band setting. And I've gone on for too long again, haven't I? The hour's up again. Perhaps we need to do a fourth one. Okay, so that's Bollinger Bands. This is I really like this one. Too many people ignore this one. So this is the MMA and the TEMA. It's they're both sloping moving averages. One set at 9, one set at 16. They're most powerful when they've crossed again. But the other big thing I like about this setup is when these are flat, much more clearly than a normal moving average, you just stay out. So stay out. So a flat MMA, adaptive moving average, or AMA as you see it sometimes, it's not got any volatility or momentum. That's what the moving average adaptive or the adaptive moving average measures. It measures volatility and momentum, and that, as a scalper, that's what we want. We want to see that change quickly, aren't we, within a minute or two. So that's what we're looking for. So when we've got a flat MMA, you stay out. Triple exponential moving average, we like to see that at an angle. You know, certainly don't want it flat either. So if they're both flat, stay out, wait. You want to see a cross of them. That's always a good sign. Or the price action, or the two lines moving in unison in one direction. Then you want to be in and add into your position. Again, let's have a quick look at that before our time is up tonight. So this is, I think actually, I'll do a separate one for VWAP. Okay, guys. Sorry, I should have tried to be a little bit less ambitious. Where's my here we are. Here's the yeah, I hope you can see all this white background. So again, we got hollow candles and red candles here. Hollow. Don't know why the setup like that. So the TMA is this one here. The purple line, sorry, the orange line is the TEMA. Here, so you can see the two lines on the chart, but you can see how they're crossing and flattening. See how the flatness. So you stay out here, particularly the exaggerated MAA, the adaptive moving average or moving average adaptive. When it's flat, stay out. We want an angle. You can see the TMA, it's a bit more choppy. It's moving up and down, but just stay out here. Move, I would have got in on that one. It's easy to say now, obviously, isn't it? But that's the one I would have been short on with my stop loss up here on that one. Nice move here. And then we got this V shape, which is really what we like as well. So here, you can either get long here at 7.35 or wait till they actually cross here later on, and off we go. Nice big down candle though, takes out positive. Again, you can either trail your stop loss up or wait for the changing direction of the candle. There we got a big negative candle, so get out there. And then what's that sign? Well, that's signed a period of consolidation. You see the price action move down quite aggressively, but after 15 minutes, you see there we had this big down candle, we had this big up leg, big down candle, engulfing candle, taking out this 3, 4, 5 previous candles here. The result was the volatility sort of died. The momentum died. So this momentum we've had, remember what we're measuring with the EMA? We're measuring momentum. So the momentum has died on this engulfing candle. That's the end of that run, my friends. That's what that's telling us. So we've gone flat. And again, at this point here, whatever this was, at 10 o'clock this morning, this looked like, if you didn't know this was going to happen to the right-hand side of the screen, this looked like this was moving down really nicely, didn't it? You'd have been perhaps short on this. And what did it do? It turned against you because this was still flat. It wasn't moving, and then we'd crossed to the upside. So despite you thinking this was going to be short because we'd had a cross here, it didn't last very long, did it? We bought it out. That shook you out. So that was the last low, the last move low that this wanted to go this morning at 10 o'clock, that whatever that was, 116.780. And we've rallied off that 116, 15, 20 pips to the upside. That's continued. So we've been above both moving averages here. We've tried supports out there, back in there, out there. Actually, it's a bit choppy. That's chopped, gone short there, down, 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 down. And again, the volatility would have probably taken you out around about here. That's gone long there. They've crossed. In fact, they don't cross till there, do they? So that's crossed there. Stop loss down here initially, trailing it up, stopped as it's reversed down. Big down candle again. But as we saw earlier in the day, that came with a bit of flatness here. So sideways action here for 5, 10, 15, 20, about 30 minutes. Then we went up. Then we've pushed to our high of the day, or what looked like high of the day. In fact, here at 16.14, it wasn't. We didn't. Our high of the day was back at 12.30, so that suggests a bit of weakness for the euro. And again, it wasn't as high as the high from early in the Asian session. So not much in it, but you can see it's lower. And then a huge sell there, which we would have been part of. This massive candle, biggest candle. Our biggest 5-minute candle of the day there, 16.45. So after the European markets closed, but that's where all the pips have been available at between 4:45 and 5:30 this afternoon. There, 5:20. In fact, that's the movement down and flattening. I would have got out now because I've had a nice big winner there. So a few losers, few winners. Some significant winners this morning here. A few losers through here, a winner there, a bit of a winner there, loser there probably, loser there as well, but a big winner here to close the day out. So the TEMA and the AMA, or the MMA, the moving adaptive average, one set for 9, one set for 16. Look for the cross of these two lines to get in the direction of the move. When the particularly the AMA is flat, stay out, stay square, just wait for an angle. You want angles with these lines, okay, like we see here. It can move really quickly. Works on all sorts of time frames. The 5-minute is my favorite for this. We just drill it down to 2 minutes. You can see it's more choppy, but you can see the sequence is still the same, the flatness, and there's that big old move earlier on. And even up to the 1 hour time frame as well. It's a bit less reliable, to be honest, but longer to wait. But yeah, I like that setup really quite a lot, particularly on the 2 minute and the 5 minute. And it works as well on gold as it does with Forex, as it does with indices, which is one of my favorite ways to scalp on the indices. So I didn't actually get to explain VWAP. I'll perhaps do a separate webinar. I'm sure we're going to have plenty of time to talk about VWAP in another session. So that's my ideas about scalping strategies, guys. It's 5, 6, 7 strategies we've talked about in both together and in separate sessions, and it's not really about the strategy. You can have the best strategy if you haven't got the right mindset, as we said right at the beginning, an approach to trading and to yourself. There's no point in buying these strategies or applying these and to different time frames to your strategy if you're not cut out to be a scalper. you can't cope with these fast-moving markets, perhaps look at a different time frame, but find something that works for you, because there's always something in the market. There's always an approach that you will find that works for you. And it's just a matter of understanding yourself, managing your risk, and keeping a clear approach and mind to trading. So that's all for tonight. I'll see you tomorrow for the US inflation data at 12:30 GMT. Lots and lots of trading books. These are my 3 favorite all-time trading books. A bit long in the tooth now, but this as relevant today as they've ever been, to be honest, my friends. Because trading hasn't changed. There's lots of technology involved now, but it's a people business. These are 2 more recent books I really, really like, both talking about a similar sort of thing. The Psychology of Trading, presumably. It's not about strategies, it's about you, my friends, and I'm actually executing what you do. So if you're not with us, do come and join us. Accounts start from $5,000, from less than $40. Our website is theproptrade.com, as you can see here, and our evaluations start from $5,000. Most people take a 2-step approach. People in a rush, I think they know what they're doing, want to buy a 1-step approach, the Express Challenge. If you're new, as I say, put in new 25, and that instantly gets you a discount off our very competitively priced challenges. Anyway, so $10,000 for $85, 50,000, you're a player. $345, 25% gets you $86 off for $250. If you haven't got $250, try the 25,000, less than $130, or around about $130 with the 25% discount. If you've already played with us before, I think it's not, there's a 15, I should know what it is, shouldn't I? There's a 15% discount going on at the moment. There's Discord as well. If you join our Discord group, I think that's still working. Discord, is it 20 or is it 15? Yeah, so there we are. So Discord 20. Join our Discord group, because that's where I put my trades up there every day. And that's where all the support is done. That's where all the chat's done with all the other traders. And that gets you, so that's a 20% discount if you've already used the 25% discount. But as I say, they're very well priced anyway, in my humble opinion. You just got to stick to the rules, and unfortunately most people can't or don't, even though they know what the rules are. 12% profit target, 4% daily loss, 7% maximum loss on the challenger step. And it's not just these figures, guys, as well. It's the whole package you get with any online broker or platform. So take all of that into account, my friends. Okay. Take care. I'll see you all again tomorrow for US CPI. Hope that was of some use. In the meantime, take care, and I will see you all again tomorrow. All the very best, everyone.